Hello, Namaskar. This is Neeraj here and welcome back to my channel Neeraj Stock Analyst. So, in today's video, I just want to discuss the implications of Government of India's budget, which was today released. So, what are the main points of this budget and how it impacts the economy and which sector and which stocks? And also, then we will talk about US Fed, because US Fed is also will be coming out in next, I think, two hours or 3 hours, their policy decision regarding the interest rate. So that is the most awaited. And also OPEC Plus meeting is there regarding the oil output and the outlook. So as you know, in this today, Government of India's that budget exercise, that annual budget and policy decisions were taken in the morning, and some of the finer points, as you know, in the budgets were that they have increased the customs duty. Some of the negative things which I would talk about is that increase the customs duty on electric vehicle and luxury cars from 60% to 70%. So it is imported cars will be more costlier, and this will impact most of these big luxury brands of the world, and also electric vehicles. So what it does is that it shuts the door on Tesla, the biggest. So it is actually, you know, I understand that Government of India, they need to increase revenue also, and also they need to encourage the domestic and local production and companies coming and investing into the Indian market. But at the same time, sometimes for some technology, some really successful and number one somebody is their unique technology, you have to give some sort of incentives so that that company or he starts coming and introduces that technology and starts production in the we get introduced to that kind of a technology in our country. So currently what happens is that Tesla, he has now that Elon Musk has firmly, he has put his kind of decision that he has decided he will go to Indonesia because of the resources, also nickel, which is the main component for the electric vehicle batteries, nickel oriented batteries. So I think we lose out on the long term. I think this would have been this is not a very good decision to discourage companies like Tesla, and definitely, even though we may have many of these electrical vehicles and all this domestic auto companies also, but still Tesla remains the number one as far as the technology is concerned. So that way, it's, in my personal opinion, I would have preferred that the duty should have been in fact reduced and allowed other companies to taste the market. And once you get such a huge and lucrative market, then definitely those companies are not stupid. They will come back and put up the plants with more incentives is provided. And also another second negative point regarding the auto sector was they have increased custom duty on SKD, semi-knockdown vehicles, means those parts and everything comes imported, and here only it is assembled as a final car in the assembly line. So that duty also is increased from 30 to 35%. It was 30%, now it is 35%. So in a way, I would suggest that okay, it is good for the domestic car companies like say Tata Motors or Maruti and Mahindras, but overall it is negative. Then another negative was that they have increased duty on silver doors, gold doors, gold ores and platinum. So all the jewellery, basically on the precious metals, they have increased the custom duty. So that is also negative for the jewellery and the gold industry. Another negative point related to this jewellery, gems and jewellery industry is that they have some kind of a reduced some duty, especially for artificially lab created diamond. Okay, for artificial lab created. So they want, the Government of India wants that some kind of encouragement that there should be some R&D, it should be more done, and artificially lab grown diamond should be, the technology should be so much kind of perfected that it can start in India, so that we don't have to rely or buy on imported naturally diamonds from, say, South Africa and Russia and those things. But when it happens, it will take many years for this kind of things to give at least some result, and nobody knows whether it will be they'll be successful or not in this. But for the time being, by this kind of direction, it is negative for the gems and jewellery industry as far as the Indian companies are concerned. And you know that India is the biggest gems and jewellery export and diamond polishing industry in the world. So I think definitely this is a negative for that particular industry. Now, the positive aspect of this was that they have increased the budget allocation to infrastructure development to 10 lakh crore rupees. So it's almost like 12 billion, $120 billion. 3.3% of the budget of India's. So that's a good aspect, so that all this railways, ports, bridges, roads, airports, new airports. So definitely it's a demand will increase for cement, steel, all this basic construction. But here I would give my analysis is, this is what the fun about is, that it's not just the point, but I will give you my analysis is that cement is a domestic driven commodity. So there is nothing like import and all this thing. It has to be consumed and manufactured in the locally surrounding areas. So for this cement, it can be a little boost as far as the demand is concerned. But for steel, it will not translate. You see, demand is always there, but steel is a commodity which is, most of these metals, they are governed by the global commodity prices, because these are global commodities. So whatever the prices internationally, according to that the prices go up and down, not according to the demand, domestic demand. These prices are driven, and the earnings or profitability and margins of metals and steel companies are directly linked to the internationally linked prices and the raw material prices and all these things. It's not related to the, volumes can always be sold in domestically, but the prices will be determined as per the international pricing, and that is where you have to depend on this, how the China this year is going to shape up post the lunar holidays, as and when it will be finally opened up. The demand boost will be there. Then government some incentives, simultaneous projects will be coming, which will boost the metal industry or not. But till that time, only for the theoretical, purpose and for the operator driven market, like India, everybody just, what is the budget? Oh, tea, some duty has gone up. Okay, I will sell tea stocks on that day. So it is an operator, a trading kind of all this movement you see in the steel or in the metal and cement. It doesn't much change the fundamentals of the industry. And positive, of course, is that they reduced the overall effective tax rate for the salaried and the middle class individual taxpayers. That minimum tax rate has been now 5%, and up to 3 lakhs of income per year there is no tax, and from 3 to 6 lakhs is 5%, and like that's where the slab from 6 to 9 is 10%, and 9 to 12 lakhs is 15%, and 12 to 15 is 20%, and above 15 lakhs is 30%. And also that rebate has been given, so that effectively you can say that up to 7 lakhs you don't have to, effectively you don't have to pay any tax. But this was required because since last 2-3 years so much of things have been done for the poor and for the upper people, but for middle class with so much of increased inflation of food, fuel, everything, taxes, GST, it was really a relief required, and this was the very much needed tax relief given, so that it at least has middle class in saving some kind of a money post all this inflation and the interest rate hikes. So this way it tries to help. So this is a good aspect. Overall, you can say that nothing great shakes for this, and that is a good, that not much. They have also that fiscal deficit will be within the target of 6.3% this year, and for FY24 it will be 5.9%. So government is trying to control the expenditure also by reducing subsidies and by rationalizing subsidies, and overall in asset creation all this money outlet will go. So in nutshell, there is not, it's a event, as I always believe that budget is just a day to day, for day or a two that event has, and it just goes off. It doesn't have much impact beyond that. The impact is, as you know, I have come out in last week 2 videos, impactful videos. One was on Adani Enterprises or Adani Group, and another was on Tesla. So you know that Adani is already crashed 30% from that particular point of time which I had come out with that price, and I see that it can only stabilize not before 1400, and most of these Adani stocks you will see a 50%, 60% erosion till the time they come out with really restructuring of this debt and more disclosures regarding debt and foreign investors. You will see that kind of weakness or the bad things happening in the end, and because of their weightage in the NSE index, you will see even Nifty not going anywhere. In fact, there is a downward bias, as I had told also, that it looks like that India is already so much expensive valuation. Say whatever the events, we just need an excuse for the correction, and I think this Adani and Hindenburg research was an excuse. And with the budget also now gone behind us, we will see the downside in the Nifty, or the weakness will continue. Also, regarding US Fed decision, which is very due in 1 or 2 hours, regarding monetary policy, this interest rate hike, whatever, we have to just wait. But my guess is that they will continue with the 50% hike, so that overall interest rate in US will become 5%. And whatever the commentary they give, people interpret. I want to interpret in X way, somebody wants to interpret in plus 2x or minus 2x way, So see, it's a very perception based interpretation of the commentary, and the market will be driven more by the US Fed's decision and also the OPEC's decision. So that regarding the output of the crude oil supply and demand, they will come out with a statement. I think it will remain like nothing much will happen. There won't be any change in the supply or the demand cuts or something like this way. They will maintain their outlook at least up to the May and till the next meeting. That's what you can see this as I come out with all these reports and market reviews, that as far as India is concerned, I still believe it is in the, because of so much of high valuation, it had already run up last year. This year I don't see much happening in the market. In fact, we will see a downward or the negative bias only for the market, with more focus coming onto the US FD and how this oil, energy and everything global scenarios pan out. That's it. I just wanted to share my thoughts with you, and just a request that if you have not yet subscribed to my channel, you please subscribe, and if you like this video, you please share it with the maximum people. And also you can visit my website www.steelanalyst.com to know about my services and also the articles and the detailed blog posts. That's it, and love you all. Ciao from 𝗷𝗫𝗀𝗀𝗀.